Hey folks, Dan Frio here with your real estate news for this March 27th, 2026. So if you're a frequent viewer of my channel, you usually see that I try to find where the glass is half full in most cases. Today it's kind of hard because if you look over here, mortgage rates, they just hit 6.62. That's over 1/8% higher than where they were yesterday. And it doesn't look like there's any reprieve in sight because right now we have oil prices. They're over $100 a barrel. This is huge inflationary numbers. And we got the bond market so far down 35 ticks. This is bad news. So folks, mortgage rates are going to go up today. They're going to hit 6.7 and or higher. How do I know that? Well, stay tuned. That's what we're going to talk about in today's video. So folks, my name is Dan Frio. I'm a licensed mortgage loan officer in all 50 states as well as Puerto Rico. My goal is to help explain to you guys what's going on with these and the whys behind it. So today we're going to talk about oil. We're going to talk about DHS. Yes, it looks like it might be getting funded. And I'm also going to explain to you guys how this bond works over through here. So if you're new to my channel, this is how we follow rates. A little confused? Well, let me explain it to you. This bond rate through here is a mortgage bond. You can see right up through there, it says MBS. That means a mortgage-backed security, so it's a mortgage bond. All you have to understand is that number up through there. If it's red, that's bad news. The bigger the number, the bigger the bad news. That means mortgage rates are going to go up. Let me explain to you how this works. You might be intrigued to saying, okay, if that goes down, rates go, how does that work? Okay, so let me explain it to you. Here's how mortgage, or basically how bonds work. Bonds have a face value. So let's say in this case, the face value of this bond is $100. Okay, so when you're the bondholder, when it matures, you get $100 when you present it to the investor. So let's say back 2-3 years ago, you bought this bond. Well, you paid me $50 for it. So you paid me $50. That's usually how bonds work. And on maturity, you're going to get $100 back. Okay, so what's the yield on that thing? Well, you gave me $50. You got back $100 when the bond matured. Well, you doubled your money. The yield is 100%. Okay, so now let's drive up the price. Let's make it simple. Let's say back then you gave me $100. You might be saying, Dan, that makes no sense, but it'll make sense in this equation. So you gave me $100. I got the bond. A year now it comes and you give me the bond back. I give you $100 back because that's the face value of the bond. What's my yield? It's nothing. So you see how the price, if it goes up, the yield comes down. This is bad. Okay, so yesterday we had a gap, and usually what happens with a gap, the next day, one day the bond market will close, the next day it'll open, and then there's a gap. There's a big adjustment there. It kind of happened again today. We had that yesterday. We're having it again today. So this is what happened yesterday, right through here. Now we started the day right down through here. Here's how detrimental yesterday was. So could we pick up another eighth today and be at 675? That's my concerns. So let's get over to basically the economic calendar to see what's coming down the pike that really would affect these things today. Well, you go and look at Monday. We didn't have anything on Monday. Tuesday, we had manufacturing and servicing numbers. Wednesday, we had oil inventories and President Trump spoke. Thursday, we had initial jobless claims that weren't so bad, and initial claims. On Friday, we got nothing. So let's get over and see what's causing the markets all these headaches. Well, if you go to here, it's right through here. Brent's oil is over $110 a barrel. Well, I don't really care at what point you watch oil now. If oil goes up, everything else is going to crash. You see oil up, that means it's inflationary. That's going to hurt all these stocks. It's going to hurt the bond market, so you're going to have bond yields going up, and that's going to push up mortgage rates. So how high are these going to go? Because if you're a homeowner, you might be saying, okay, I completely missed my opportunity to refinance. And if you're a home buyer, you might be saying, okay, at $599, the house is affordable. 6.25, it was getting a little iffy. 6.5, I don't know if I can buy a house. At 7, I think it's out of my cards. Well, I'm going to give you some tools that you can help you put yourself in a position to see, is it in your cards or not? But let's get over to basically some of the data we want to look at. Economic calendar, nothing there. So let's get over to this piece of the puzzle. And the reason why I want to show you this is now a lot of mainstream media is saying, oh, there's now a 50% chance the Federal Reserve is actually going to increase rates. Okay, so the Federal Reserve, they control that rate over there. That's not a mortgage rate or a car loan or anything. It's called the federal funds rate. Okay, what they look at is they look at inflation through the PCE, they look at the jobs report, and they look at the gross domestic production. Okay, so if we got to look at GDP, even the Fed came out and said this is going to be about 2.4, a little bit stronger than we thought. Well, that's going to probably deplete a little bit. The jobs market, even in this week, we had initial jobless claims and continued claims coming in okay. We had ADP, even though I don't like them, they came in okay. So the jobs market's okay. This is the wild card. So this is where inflation's, it's at 2.8 in January. That's when oil was 60. Now at oil at 100, how high is the inflation number going to go? So that's what you really got to be concerned with. So now let's get over to the Fed Watch tool. Now this is where it tells us what's the Federal Reserve going to do at the next meeting, maybe the next few meetings, even the meetings through the end of next year. Well, mainstream media keeps coming in saying there's over now a 50% chance that they're going to push up rates. Well, let's go to the calendar and let's fact check them. So you go down through here, and remember, we were just looking at the federal funds rate right now is 3.75 or 3.5 to 3.75, right in this range right through here. Okay, so then you're going to see that whole blue chart down through there, whatever color you want to call that. And this is telling us there's a 95% chance the Fed's not going to do anything at the next meeting. Basically, they're not going to do anything until 2027. But if you look over to this side, do you see anywhere in 3.75 to 4 where it says 50% or more? I don't. So it doesn't really look like there's a 50% chance that the Federal Reserve will be increasing rates, but it's all going to depend on oil and how high that pushes up our inflationary numbers. So what should you do? Well, let's get over to these things over here. So I try to come out here and give you some guidance. If you're a home buyer, I'm going to talk to you guys first, and then if you're a homeowner, I got a fantastic tool for you here in a second. If you're looking to buy your first house, or you're looking to buy a house, you already got pre-approved or pre-qualified, please go back to the drawing board. Okay, so here's what I want you to do. Make sure you're getting pre-approved, not just pre-qualified. They're looking at your financials, your bank statements, and everything. It might take a couple days. Make sure you get pre-approved at 7%. Why? Well, that's where mortgage rates might be here soon. So if you can't afford it at 7, hold off. Okay, rates, I'm expecting rates to kind of tick back down. I don't think they're going to get back down to 5.99 anytime soon, because this inflationary is oil stays higher for longer, that inflation is going to stay higher for longer, and rates are going to stay higher for longer. So that's what you're going to see. So I would just hang on. If you have to buy, maybe look at it, checking to see if maybe a 2-1 buy down or a 1-1 buy down works for you. I got a whole bunch of calculators down there. Check them out. There's actually a 2-1 buy down calculator down there to explain to you how it works. So make sure you get pre-approved. If you're closing within the next 2 weeks, you got to lock in. So lock in at the shortest duration you can and go from there. But if you're a home owner right now, you're probably thinking, okay, 599 saved me $400 and I got a little greedy. But if it gets back there, let me know. Well, let's get over to this thing right through here. I did create this thing here. This is a new tool coming out, and it's going to be a part of RateWatch 2.2. Okay, so what it's going to do is you'll be able to kind of put in your information, your mortgage information. Then live, you'll be able to put in your true information, and it's going to tell you what exact rate you could qualify for at that time. There might be a little variance in there because of the timing, the markets and your input. But if it works, you'll be able to push a button and get the application started immediately. If it doesn't, you can actually tell me what rate or what loan amount or what savings each month you want, and I'll contact you there. But where this is going to help really is realtors out there and those looking to buy their first house. Okay, so now what you can do is you can plug in, instead of going to this lender and that broker and this person over here and getting all these rate quotes, you're going to be able to go here and find the exact rate you're going to qualify for. These should be some of the best rates in the whole country, folks. Okay, so check it out, find out what rate you qualify for, then use the calculators down below to find out whether your mortgage payment is going to be down, all the way down to what your real estate taxes is going to be. So you have a precise payment, and if you can afford it, maybe you can move on from there. So my goal is to provide you all the tools, not to talk you into, does a refinancing make sense? I want you to decide that. My goal is to provide you all the information and the tools to make you a better home owner, or maybe a better home buyer. So folks, my name is Dan Frio. If you're a home owner right now, go to RateWatch 2.1. This will be revised to 2.2. It's going to add a ton of things. Also with our live mortgage rate pricer in there, you can use this also. We're creating a tab here for home buyers as well. So let's get back to the bond market. It continues to deteriorate. So remember, guys, as this goes down, remember our bond scenario, it's not good news. So stock prices are going to drop. NASDAQ is in correction mode. Officially is down 10% or more. I told you it was a little frothy back when. So you're going to see mortgage rates. They're going to be at 6.65, 6.7, maybe by the end of the day. So if you're freaking out and you need some help with this, at least we'll talk you off the ledge, reach out to us. I'd love to help. I'm licensed in all 50 states as well as Puerto Rico. My slogan's this: one application, one credit pool. I'm going to compare your loan to over 30 different lenders. You might ask how and why. Well, the why piece is the bank I work at, they provide me the licensing in all 50 states as well as Puerto Rico. The how, that's the cool part. We're set up with over 30, almost 40 different lenders. We can use their programs and their rates to help you out. So if my bank doesn't have the best rate, I can use one of these banks that we're associated with to get you their products and the pricings. So a little confused on all this? Well, check out my website. Check out my YouTube channel. I have over 8,000 1,000 videos on my YouTube channel. Especially check out this one we posted yesterday. It's our new pricing tool where you can actually get your real rate within 60 seconds. It'll be launched on Monday. I'll have a special event for that. But otherwise, folks, rates are going to go up. I can't say it any other way. Rates are going up. You're going to see it's at least 6.7 or 6.75 today. So if you're freaking out, reach out to me. I'd love to help you out, at least to explain to you guys what you qualify for, the whys behind it. Then you can make the decisions what's best for you and your family. So thanks for watching. Don't forget to subscribe over there. And other than that, stay warm, be safe, and God bless you. Have a fantastic weekend. And I'll see you here at 1 o'clock. I have a live event today to let you know what's kind of going down the pike next week. But if you're not there, I'll see you Monday morning to show you how these things will be going on Monday. See you then.